Hello, this is Fred, your friendly neighborhood realtor here in Orlando, Florida. I'm going to give you a market update for July 29th, 2024. Now, first of all, we've had some good economic news come out. The GDP was strong, and also at the same time, the June year-over-year inflation rate came in right around 2.5%. So what's that going to mean? We're going to find out here in a couple of days, because starting tomorrow is when the Fed's going to meet, and we're going to listen to kind of what they say. Now, a lot of people are kind of thinking that they're going to possibly say a reduction in September, but they may hold off just a little bit before they do so. So if they give some positive news that we have a rate reduction coming on the prime rate, there's a good chance that you're going to see some easing of the mortgage rates right now. And based on some of the numbers that have come out, the mortgage rates have kind of gone down. If you remember, a while back, we're over 7%. Pretty much everything is below 6s. We pretty much have everything right in the mid 6s right now or below. So we even have some good numbers right there in the 5s. It's the numbers have gotten better than they were. So if you're looking to do that mortgage, it's definitely getting to be a better time, and we're going to wait to see in the next couple of days what's actually going to happen from the Fed. Everybody will be listening closely, and come Wednesday afternoon, I'm sure we'll be talking about it, or if not, worst case Thursday sometime, we'll be talking about seeing what we can, what's going on with the market. But right now, let's look at it, what's going on in that 30-year fixed, which is one of the most popular loan programs out there, is looking at 6.4%. And that's going to mean about $626 per 100,000. Now, keep in mind, remember, if you don't do 20% down, you're going to have a mortgage insurance. So that's going to add to that principal and interest payment. Now, a couple other programs that I kind of like, if you're going to go the fixed rate and on the standards, are your 15 and your 20 year. And the 20 year is not quite as popular, but it's becoming a little bit more because people like the low payment a little bit less. And at the same time, though, the nice with the 15 and 20 year is you build your equity faster, and also you save money on your mortgage costs, which means your payment is broken up principal and interest. So that interest is what you're paying to borrow that principal. And that's, in this case, it's going to start off being how much more loan value you put in for that mortgage. So your 20 year right now is sitting at 5.99%, or $716 per 100,000. Keep in mind, remember, once, if you don't do 20% down, you're going to wind up having to pay also mortgage premium or mortgage insurance on there. If you want to do the 15 year, you can do it, 5.71%. $828 per 100,000. So, you know, it is more payment, but you're going to be done in 15 years. Other programs that are out there, your 30-year FHA fixed, 5.55%, $571. Now you can get in there for as low as 3.5% down if your credit scores are good enough. But remember, you're still going to have that mortgage insurance if you're not at 20% down, which is the reason why a lot of people do choose the FHA, because it helps them get in there. Now, if you are a service member and have been serving for a little while, or a veteran, and you've served enough time to where you get you can get a VA loan, it is highly recommended. It is right now, the interest rate is 5.69%. or $580 principal and interest per $100,000. Now, the nice thing with the VA loan is this: you can get in for zero down, no mortgage insurance. So it is a way for the veteran or current service member to get into that home at some pretty good numbers. And you can see it's better than the 30-year fix, because part of that is, and the reason why that you have the zero down possibility there, is because the government or the Veterans Administration guarantees a certain percentage of that in order to make up your 20%. So you're able to definitely get into that home, and that's going to be something that mortgage companies like, because they know they can get at least that much down or back in case you default on the loan. Now, there is a 5/1 ARM or adjustable rate mortgage. Not a mortgage that I highly recommend, because say what happens is if 6 months from now something goes on and the interest rates go up, well, at that point, your payment within that year frame or whenever your adjustments are made can also go up. So it can drastically increase if you wind up holding on to that loan for a while. Now, your rate right now is 6.37% or $624 per 100,000. Now, if you remember a while back, we talked about the annual percentage rate, and that is kind of like the true cost. And they don't publish it a whole lot, but I've come across numbers before, and the adjustable rate mortgage had a higher annual percentage rate than your other loan programs. So it's one I would be very careful with if you decide to go with an adjustable rate mortgage. And if you do, I recommend that you only stay in it for a short period of time. I believe it's the 5/1 ARM is not going to adjust for the first 5 years. So you might want to just hold off. If you're going to be in there for a short time, it's not going to be a big deal. If you know you're going to refinance in a short time, it may not be a big problem. But if you're going to refinance, it could still be at a higher rate. So probably try to stick with the 5/1 ARM or away from the 5/1 ARM. Stick more with your fixed rates and see what you can do there. And if you want to try to pay off your loan earlier, but you need that lower payment from the 30-year fixed, I know people that turn around and just make 2 payments a month. And the way they do that, it actually kind of reduces the principal a little bit, and they can save some time off their mortgage that way. There's different ways that you can actually save the money if you can't do the 5, 15, or 20-year program. Now, if you have any real estate questions or comments reference what we've talked about today, make sure you leave them in the comments below. If you have real estate needs you want to contact us directly, our contact information is also below in the description. And while you're down there, make sure you click like, subscribe, and the bell notification, so as we produce new videos, you will also be notified. All right, thank you and have a good day.